CMQ investors, we have big news from none other than the greatest investor of all time. That's Warren Buffett. According to the Wall Street Journal and the latest 13F filing from Berkshire Hathaway, Warren Buffett has been loading up on more stocks, and we have all those details, so let's get into it. I also want to make a quick note that this is the second time I've recorded this because I hated the first one so much, just to give you a sense of the dedication I have to even just sharing the news with you. So if you're here for the first time, hope you'll subscribe, hope you'll like this video. Helps the channel grow, and I appreciate it a lot. Okay, here's the news. So because of this 13F filing, we now know that last quarter, Berkshire Hathaway was loading up on more Occidental Petroleum. That is now a top 10 position in the Berkshire portfolio, which is big news because, a lot of times you'll hear these numbers, X number of billions, and you think, wow, they took a big position, but in the big scheme of their portfolio, it's actually small potatoes. Well, Occidental is no longer small potatoes. This article also notes that in the past few months, Berkshire's also been loading up on Chevron. They did a merger-arbitrage bet on Activision Blizzard, which I don't encourage anyone else to try because you're not Warren Buffett. They bought shares of HP. And some new ones here that I just learned about through this article, Citigroup and Ally Financial. So I'm looking forward to kind of thinking about those companies a little bit differently now and trying to get a sense of what their angle was. I know I read Citigroup's 10K not that long ago, so we'll get into that in another video. They also added to their position in Apple, which is great news. If you're an Apple shareholder, it's a real sign of just continued faith in all things that are made in Cupertino. Meanwhile, Berkshire also exited their position in Wells Fargo, which I just learned that's actually a position they've held since 1989. So I was thinking, can you imagine getting a call at Wells Fargo, Buffett's out. It's like, so much for that. They've held Wells Fargo through thick and thin, and Wells Fargo has not been unblemished along the way. So I'm curious what the thinking is there, and I'm sure lots of people will be wondering as well. I have some thoughts about all these moves, or generally what this strategy means a little bit later, as well as some really good comments from the comment section of the Wall Street Journal that I'll share with you. Some further notes here, though, we should get through. Investors got to look at what Berkshire has been buying as well as what it's been selling when it filed what is known as the Form 13F. I just call it the 13F with the SEC on Monday. If you don't know this, the SEC requires all institutional investors that manage more than $100 million to file the form within 45 days of the end of each quarter. And I have one of my dogs is sleeping over here. I can hear him. Because institutions must disclose their equity holdings on the form, as well as the size and the market value of each position, investors often use these 13Fs to gauge how large money managers are playing the stock market. Okay, now we're CMQ investors. We don't play the stock market. We invest for the long term to build wealth. So that's for everyone else. Mr. Buffett, who's a longtime value investor, has long advised that investors be greedy when others are fearful. According to the Wall Street Journal, one key takeaway from Berkshire's filing was this: the market slowdown, the sell-off, whatever you want to call it, has allowed the company to go on a spending spree. Mr. Buffett is famous for the saying, be greedy when others are fearful, and that philosophy was likely difficult to practice for much of the past 2 years, during which investors' mood largely seemed anything but fearful. Now that the market is slumping, Berkshire is in a prime position to add to its mammoth stock portfolio, investors say. One of these investors, Rupal Bansali, who's the chief investment officer for global equities at Ariel Investments, said cash is dry powder and Mr. Buffett has a lot of it. Miss Bansali, among others, also believes that Berkshire's investments in Chevron and Occidental might reflect a bet that commodity prices will stay elevated for some time. Energy stocks have been by far the best performing group in the S&P 500 this year, benefiting from a surge in commodities prices that began after Russia's invasion of Ukraine raised concerns about disruptions to oil and gas supply lines. Chevron shares are up, any guesses? 47% this year, while Occidental shares have gone up, any guess? Going 134% this year. In comparison, the S&P 500 has fallen 16%. They're clearly owning companies that are likely to be an inflation hedge, Ms. Bansali said. Wow, what a great insight. I'm being kind of harsh on Ms. Bansali here. Ms. Bansali, if you're watching this video, I apologize. I don't know you. You seem like a great person. Energy stocks also offer two characteristics that Mr. Buffett has traditionally gravitated towards: low valuations, as well as shareholder returns in the form of buybacks and dividends. And that is according to Jim Shanahan, senior equity research analyst at Edward Jones. Dividend-paying stocks have outperformed the S&P 500 this year in part as investors whipsawed by market volatility have sought out stocks that can offer steady cash returns. That's a great sentence, by the way. Should we say it again? DJ, bring it back. Dividend-paying stocks have outperformed the S&P 500 this year, in part as investors whipsawed by market volatility have sought out stocks that can offer steady cash returns. Whipsawed. Whipsawed. All right, I'm done. It fits the profile, Mr. Shanahan said of Berkshire's Chevron and Occidental share purchases. Berkshire ramped up its purchases of bank stocks, which also tend to trade at relatively low valuations and offer dividends. The company bought 55 million shares of Citigroup in the first quarter. That's an interesting buy, by the way. A stake that's valued at about $3 billion. The move marks a reversal of sorts for Berkshire. It unloaded much of its bank stocks in 2020, selling Goldman Sachs, JP Morgan, and much of its Wells Fargo stake, only to miss out on the financial sector's remarkable rally in the second half of the year and in 2021. They faced a lot of criticism for not having done more in March and April of 2020, Mr. Shanahan said of Berkshire, but they defended it by saying back then that they didn't know how bad it was going to get. It was a different environment. Let me just say, if you remember that time period, if we're being intellectually honest here, no one knew what was going to happen. And I think as a Berkshire Hathaway shareholder myself, I'm happy that, they were relatively conservative in that moment because, it could have been easy to try to, predict the future or just, take a swing at something that, might not have worked out well at all. So, I'm not going to look back and criticize that. Mr. Shanahan said that while the pandemic marked a period of missed opportunities for Berkshire, he is pleased to see the company ramping up its investment activity again. With stock volatility remaining elevated, many investors and analysts expect Mr. Buffett, as well as Berkshire portfolio managers Ted Weschler and Todd Combs, to keep putting cash to work in the market over the coming months. Question for you guys in the comment section. Any ideas or any guesses on what other companies that Buffett and the team at Berkshire might buy in this coming quarter? It's a total, no one knows. There's no way to accurately predict it, but I'd just be curious to hear your thoughts. I love reading the comments, so if you want to leave one, please go ahead and do that. Who knows? It could turn into a video of itself. Berkshire ended last year with a mountain of cash on its hands, not necessarily out of a desire to build up its war chest, but because it had been impossible to find companies that seemed worth investing in for the long term. And this is something that Warren Buffett has said, or did say in his most recent letter to shareholders, that Mr. Buffett said this to shareholders in his annual letter sent out in February. It had $106.3 billion in cash as of March 31st, which was down from $146.7 billion at the end of 2021. Quick note about that letter that went out in February. There's an episode of the CMQ Investing podcast, which you can follow for free, by the way, on Apple or Spotify or really anywhere you can get your podcasts. And I did a live reading of it, and it was literally live during an Instagram live broadcast. It was having fun with the people who were there. And it's the only episode that has earned me a very negative review, which you can read on the Apple Podcasts store, I think they call it. So it made me feel bad. I felt really bad. But it was whatever. He used a lot of italics. It was tough to read. Okay, I digress. Let's continue. With tightening monetary policy, slowing economic growth, and sustained supply chain disruptions putting markets on edge, Mr. Buffett is in his element, said David Cass, a finance professor at University of Maryland's Robert H. Smith School of Business. This is what I'd consider to be Warren Buffett's sweet spot, Mr. Cass said. The almost wholesale selling in the market has provided Berkshire an opportunity to buy securities at bargain prices. Okay, I will include the link to this article in the description below, as well as some other good links that you might want to check out. I'm not selling anything. There's nothing down there that's going to make me any money directly anyway, but I'd love to have you follow our podcast, obviously subscribe to this YouTube channel, and continue on our journey here as CMQ investors as we build wealth in the long term and grow old together and just get super wealthy. So you will be a billionaire. I am jacked up on coffee right now, if you can't tell. I'm like sweating through my face, but that's not going to stop me because I have some comments I want to share with you all that I thought were just worth sharing. 3 of them. I singled out 3 of them. So let me pull those up for you. Appreciate you guys watching this, hanging out with me. I'm really taking YouTube seriously. I'm experimenting. I'm not being afraid to try different things and learn from that and learn from the data so we can build what I believe will be a fantastic investment channel. The first comment here is a good one to bring up after that last part of the article. It's from Kevin, who says, I wouldn't call these bargain prices, but they are definitely more based in value than they were at the end of last year. And I think that's a very fair point. Next here from Alan. He says, if you bought Apple stock when it first came out and held on to it, you made millions. And that's with the 75% drop in the stock price in 1 year. Oof, what year was that? If you are in the market for the long term, you'll be fine. But if you're in the market for the short term or an active investor, anything and everything is on the table. Great reminder. Another way to say long-term investor is CMQ investor. That stands for compound money quietly. That's the mantra. Anytime I get tempted to start buying in and out of stocks, I remind myself just that. What I'm trying to do is compound money quietly. If you'd like to know more about that, just let me know. I can make a separate video. The last comment, though, comes from Brian. I think he was being facetious, but also it definitely has some truth in the jest. Brian says, I'd love to buy stocks right now, but I'm trying to avoid bankruptcy. And for me, the reason I wanted to single this comment out is because I think there's a lot of speculative assets that people weren't thinking twice about this time last year that now they're probably not going to go near. And I believe, and I can't, I don't pretend like I can predict the future of markets, or I don't try to invest based on the behavior of my fellow human being. But I would imagine we're going to see some deflated prices that come as a result of that, particularly in the Bitcoin realm. But who knows? Maybe I'm wrong. You have the comments section to let me know what you think. But I really appreciate you watching this video. As I said, if you made it all this way, I really hope you'll subscribe, share it with someone, give it a like. That's how I tell that, we're making good content. So I want to make more of, what you're appreciating and less of what you think stinks. So for CMQ Investing, my name is Chris Franco. Thanks so much for watching, and we'll talk soon. Later.